GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks a lot.
You've come up with something that's pretty interesting that perhaps Canadians should know about. You call it the Housing Bubble Index. How does that work, and where are we on the index?
The index is something that we created as an outgrowth of our need to explain things to consumers without having a big complicated run-on about what exactly we're doing. So had we had this index available last year in British Columbia, it would have made things far easier for us to explain why your housing market was cresting, rolled over, and why all of the other myths in that went on for the rest of the year got reported. So with the Housing Bubble Index last year, if you had talked to us about the province of British Columbia, we would have told you in April of 2016 your sales mix. In other words, what houses in the houses in the province that were actually selling versus all the rest of the houses that weren't, how that was skewing the average selling price. Why this is important is this. From 1980 till today, 50% of the months in any housing market in Canada, plus or minus 2 or 3%, including the national market, all were either were correcting for 50% of the time and inflating for the other 50% of the time. It's only on a rare occasion would you have what's called a balanced market, and that only lasts maybe for 2 or 3 weeks over a long, as much as a 10-year period, where the market is actually balanced. There are long periods where housing prices are inflating, the housing bubble is inflating, and then there are long periods where housing prices are deflating. And this is how a housing bubble gets formed, and it's how a housing bubble eventually always corrects. Now, I need to stress to you this. This is not a big, huge move for us. We know that housing prices have to increase along a certain line, and there are certain metrics that you measure so you know what the real house price gains that are possible. Anything above that is an illusion. It's something that sooner or later will be removed from the market. So when you hear these crazy comments like last year about 60% house price gains in some neighborhoods, you know that over time, that 60% gain is going to have to be taken back out of the market. Now, that can be taken out several ways. It can be taken by falling housing prices. It can be taken on years and years and years of zero house price growth, which eventually removes that, deflates the bubble. And that happens everywhere in Canada, every single housing market. We like to measure provincial numbers because provincial numbers are more accurate, and they consider the entire market. So the bubble index has moved this much in the province of British Columbia between April and the end of February, April of 2016 and the end of February 2017. In April of 2016, at the peak of your market, peak house price growth happened in that specific month, and it hit at 374% higher than what normally has taken place in British Columbia since 1980. This year, we're back to zero again. At the end of February, we were only at 1.7% greater. This particular metric that we're talking about, the one we released to the public, we're going to be releasing to the public, is not the actual metric that we use month to month. This one just simply allows the market to be seen in a more rational and an easier view by the consumer. Because the only reason house price gains go up and down is simply because the sales mix, the mix of houses that are selling in a given month, change radically from one month to the next. And over a period of time, that change is consistent and it reaches a point where it can no longer be sustained and it has to start correcting. And that's what a bubble index measures. The difference between purchasing a home using a bubble index over purchasing one not using a bubble index will change your cumulative average house price growth rate over a 25 years of ownership of approximately 1.25%. If you went to a stockbroker and you were getting 5% return on your stocks, and he told you he could guarantee to increase your stock portfolio by 6% a year, he would be the record-setting stockbroker in the history of the world if he could do that consecutively for 25 years. What I'm telling you with house prices is it's so easy that if you have the proper metrics, anybody can turn a 5% or a 4% or a 5% return into a 5 or a 6% return every year over a 25-year period.
How does Vancouver's spring market look for new listings and sales?
Well, first of all, this listing myth is another one that needs to be debunked. Listings are actually a leading indicator of potential future business. It is not an indicator the way that the real estate boards present it to you or any of the economists in Canada actually use it as. It is a leading indicator of future business. It has nothing to do with house price pressure. It has nothing to do with house price gains. It has nothing to do with supply and demand. And even though I understand that doesn't make a lot of common sense to people, this again is what the bubble index proves. There are so many unique supply and demand measures in a housing market that to suggest your listing count has anything to do with house price gains is the reason why there is no statistical data or correlation available anywhere in the world to support that conclusion. So your listing counts in British Columbia have slowly started to rise, but in proportion to the sales, they are meteorically increased. But since your sales rate has dropped such a huge amount in the last 12 months, that the sales rate, the number of listings for sale times the sales rate will give you your future potential sales. In other words, it will tell you what your market's going to look going forward. And your market right now is basically probably going to plateau, reach its trough in the next couple of months. Although we are still trending at, it will take about 6 months to catch up in terms of anyone reading that in the newspaper. So your listing count will be slightly higher. It will be misrepresented to the public once again. At the same time, sales will gradually, the huge drop year over year, you're not going to see, you're not going to hear about anymore because the market was already cooling coming out of May and June, and going forward, if you were comparing this year's number against a cooling number from the last year, of course, it won't be as big a difference as it was in February, March, April, when you were comparing this year's number against a heating number from the previous year.
Would you say then that sales are about normal instead of being a big spike?
Oh no, your sales are still continuing to decline. You're off about 1,500 sales. This March versus last March, your sales have dropped by about 1,500. Now that'll be presented as a percentage decrease year over year, and it won't sound as bad as what it really is. But 1,500 sales, that's as many sales as there were in the month of January alone. So March this year has lost the same number of sales that actually took place in January of this year. It's a huge number. And that's why you're all of a sudden now the benchmark price, all of the average selling price, all of the metrics that not really metrics, all of the stats that real estate boards talk about, CMHC talks about, the economists, your professors at your universities out in BC who get reported all the time. These statistics take a lot longer to reflect what the metrics actually calculate for the market. So you're not going to hear anywhere that last July in the greater Vancouver area, housing prices were up $150,000 year over year. You're not going to hear it expressed that way anywhere. You're going to hear it as some percentage, comparing it against last year's number or a 5-year ago number or something of that nature. The truth is, the average purchase price increased by $150,000 in July of 2016 versus July of 2015. That's why housing markets can't go on forever. People can't afford to take an extra $149,000 mortgage year after year after year. It's why a housing market has to correct. It's looking right now that in March of 2017, it looks like the year-over-year increase is going to be down to about $10,000 to $15,000. When you look at a $10,000 to $15,000 increase versus a $150,000 increase, and every month over the last since July of last year, that increase has slowly declined. You know that come April, what was a positive gain for the people who purchased last March technically will not be for the same people, for the people who had purchased in April, where they're going to actually hear in the newspapers months later that they lost money in the previous year. This is how, when we talk about house price corrections, why people don't understand the magnitude of what's going on in the marketplace behind the scenes. And when we talk about a move of $150,000 between July and April of this year, that has never happened in the history of Canadian real estate.
We'll have more with Ross Kay right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, how do house prices in Vancouver compare to what they were doing in 2008, 2009 when the recession hit? How do sales look compared to then? Okay,
well, what I'm going to do is I'm not going to use the little tiny market of Vancouver, because people get fooled when people talk about a market that small. What your listeners have to understand is that it takes a huge amount of increase in an individual home selling in its price to get a change in the average selling price in a small community. What I mean is that it's way easier for house prices to rise in Toronto than it is for Vancouver. It's way easier for house prices to rise in Ontario versus what it is in British Columbia or Alberta or Saskatchewan or Manitoba or Newfoundland. The smaller the market size, the harder it is for house prices to increase. Now, there are reasons why house prices increase in a province like Saskatchewan, but that's really a higher level discussion that I'm not prepared to talk about in public at this time. But I am prepared to talk about British Columbia. So you're referencing the 2008 and the 2009 period. Is that correct?
That's right.
That's right. So when we're looking in that period of time, I think housing prices peaked in British Columbia using the average selling price metric in August of 2008, and they dropped right on through till May of 2009. So you had 1, 2, 3, 4, 5, 6, 7, 8. You had 10 months of falling house prices before housing prices started to rise again. So you had a small trough in there. That trough really didn't happen. The only reason it happened, as we all know, is because of the Great Recession. It didn't happen for any other reason. Panic set in. There was some panic selling going on. Buyers held back. Buyers buying the more expensive homes pulled out of the market, and that's how you had that small house price fallback of about $24,000 at that time. So that little tiny fallback really wasn't a fallback. It was simply a consumer behavior to news reports that were ongoing at the time. Because the market immediately turned back, and by November of 2009, housing prices in British Columbia were already back above what they were before the small decline started to take place. What has gone on since November of 2009 until today, till July of 2016, where housing prices continued to increase nonstop. The illusion of house price growth continued to appear nonstop. We have already seen, even though you haven't heard this in the paper anywhere, I'm sure when I tell you this, you're not going to believe me. Housing prices have dropped already in the province of British Columbia from July of 2016 till February of 2017, more than they did back in 2008, 2009. Would you believe that?
Why not?
Yeah, I know you're saying that because I'm telling you, Jim, but would you believe that from what the news reports and everything that are out there are telling you?
They're not reporting anything.
They're not reporting anything. This is a factual, hard number that anyone could take me to court to prove. Housing prices since July of 2016 to February of 2017 in the province of British Columbia have dropped more than they dropped in that period you referenced in 2008 and 2009. Again, coincidentally, that's what the bubble index shows you. It shows you how these housing prices happen and how they get corrected without the public even knowing about it. If you listen to the real estate boards, the real estate statistics people out there, the economists, all of the academics out of British Columbia, you would not have heard that the prices have already corrected more than they did in 2008 and 2009. Because these people's perspective is limited to a very small talking point that they may be studying, i.e. housing prices in Howe Sound, i.e. housing prices in Kelowna, i.e. housing prices in Victoria. They don't look at the market for how a market functions, which out in your case, it's British Columbia's market. And when you look at it on the provincial level, all of a sudden, but using the metrics that we use, it shows you what's really going on in the market. This is the type of or housing market intelligence that a homeowner needs to have in their pocket. Certainly, if you're buying or selling your house, you really need to know these things. But as you're owning a house for the next 20, 30, 40 years, if you don't have access to this type of information, you can't make a rational, informed decision on how you should own your home. And as we go forward over the next 25-year period, I can assure everyone that there is no way possible that the average selling price 20 years from now in the province of British Columbia is going to be $1.9 million. Housing prices are not going to increase on average in British Columbia by $1.2 million to reach that 1.9 million 25 years from now. When you're listening to these crazy comments where they reference percentage change is a number used by the real estate industry to hide what the cost of commission really is to the person who avails themselves the services of a real estate agent. The percentage that they reference when you're talking about in British Columbia over the last since 1980, you're looking at about an annual increase of around 6.6% per year. That's what allows real estate agents to charge their commission. No other reason. The 6% average increase in British Columbia since 1980 till today. There's a reason why it's 6%. It's got nothing to do with rising house prices. It's got to do with inflation, yes. It's got to improving your house, yes. But it's got nothing to do with rising house prices. That's why housing bubbles happen in Canada, and they always happen, and they always pop, and there is huge financial damage that is done to the people who listen to all of this nonsense that is out there about a housing market. I can sit down with any economist, academic, CMHC, Bank of Canada representative, Minister of Finance, Provincial Minister of Finance, and in half an hour, they will be sitting there with their mouth hung wide open saying it's impossible what I'm saying, even though it's staring them in the face, and they can't avoid the fact that what I'm showing them makes 100% mathematical correct assessments. They have had decades and decades of never understanding how a housing market functions. And they're lifting their jaws off the floor, and they don't realize what they have just witnessed. And what you got to realize is this. It is impossible for wages in British Columbia to go up enough to cover an extra $1.2 million of house price gain over the next 25 years. And that is assuming interest rates for the next 25 years stayed at 2.4% on a 5-year term. I think there's universal acceptance around the world by every economist, everyone else, that it is impossible interest rates are going to stay at 2.4% unless there is a global recession that wipes out everybody. So what I'm telling you folks and your listeners is, if you actually think housing prices are going to reach in British Columbia, maintain the provincial increase that you've witnessed since 1980 forward, and reach $1.9 million 25 years from now, not only do I have floodplain land to sell you in Calgary, but there's some swampland down in Florida to be sold to.
We'll have more with Ross Kay right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, Canada's central banker, doesn't believe credit conditions have anything to do with housing speculation. Do you agree?
Speculation is common at the peak of a bubble. So when you reach a bubble peak, in other words, about the last 12 months of a bubble, there's this euphoria that takes place in the investor community. You know, you've had, 2 or 5 years of all of these so-called experts giving people advice on how to use real estate as an investment. Just last weekend, there was one in Toronto where Tony Robbins came in. I think we talked about it last week in the show. There's these membership network where people are paying hundreds of dollars a month to get advice on investment real estate. In other words, they're getting conned fleeced out of money month after month after month. The euphoria that happens in the peak of a housing bubble is common. It's the exact same thing we saw back in 1988, 89, 90 in Ontario here, where Tommy Wu was a star and everybody thought they should buy condos, rent them out, and become multimillionaires. A house price correction quickly rectifies that comment. Is there anything wrong if someone has the financial ability to invest in the stock market with leveraging their investment on their stocks at 3-to-1, if they financially can afford to do it? In other words, they're so secure that the banks will lend them the money under their lending practices. No, there's nothing wrong with that. There's nothing wrong with the speculation that's going on right now. The beautiful thing about the speculation is, so this is more applicable to your millennial listeners in the show or to people who are going to be in the market for 25 years or more. The beautiful thing about the speculation part is that the more speculation there is, the more rapid your house price bubble deflates. So this deflation that we've seen in British Columbia, for example, it's predicated on high-rise condos being sold in Greater Vancouver to investors who are now coming to market, and now they're selling those. I know you've heard some myths about, well, the low-end market is still increasing in value. That's not the case at all. You're having new condos that were purchased a couple of years ago that are now being closed upon where people are buying them. Those people can take a hit of 50% of the gain and still walk away with an extra 50% in their pocket. But as this rolls out, and again, in a market like Toronto, the Greater Toronto area, which is huge, it's massive how large it is. The number of units that come to market, the market is very sensitive to that. So what the Bank of Canada should really be saying is, now I know that they're not, because the financial consequence of a house price correction is going to be immeasurable in my mind right now on a national basis. But for the regular person, the regular rational person who hasn't overextended themselves, who hasn't gone out and believed all of this house price myth over the last couple of years, now it's time for the rest of the Canadians. That 85% who said this is impossible, it's irrational. It's time now for that 85% to capitalize on the market as it corrects. And these speculators, they're going to give you a little bit of extra room to capitalize because they allow the market to correct quicker, which has a cascading effect on the rest of the market. It's just real estate 101. And for the Bank of Canada to say it's got something to do with lending practices, that is just nonsense. If the people don't qualify for the mortgage, they're not getting it. If they're going to a secondary resource where they're paying higher interest rates so that they don't have to use the same qualifying standards, then someone else is taking that risk, not Canadians. The rest of the Canadians who aren't doing these foolish things, they're the ones that are finally going to be rewarded for being prudent and rational.
Are subprime mortgage bonds about to make a comeback in Canada?
They're not really making a comeback. I mean, out in British Columbia, they've been around for a long time. They can frame it as a bond, or they can frame it as a mortgage company who you will invest in, and then they will loan out your money to someone else in the form of a second mortgage or a little more risky first mortgage. So I know there's places out in British Columbia that have been having annual gains of over 8% for the last 6 or 7 years. So this has already been ongoing for throughout history. It's been ongoing. To frame it as a bond discussion simply is another example of the ignorance that exists on how the housing market functions. It doesn't matter whether it's a bond or it's some retired couple out there who's lent $100,000 to a young couple as a second mortgage on their house, but the people can carry it. There's enough equity in the house that if there was a problem, the lawyer could do what he has to do to get the money back from that older couple. This has gone on forever. So you're going to hear it in the news. We've got HCC right now that Mark Cahodes has been on and on about, and Mark is correct in his assessment of that company. But this is not unusual. This is normal. All it's going to do is it's just going to make, when the housing bubble pops, it's going to make it deflate way quicker than it would have otherwise.
What's the latest on the Toronto real estate market?
The Toronto real estate market. So probably, this may be our last topic today. This relates back to our bubble index. This relates back to house price myth. This relates to how Canadians are conned every single month by organized real estate, the banks, economists, academics, everyone else who's been talking about housing markets, other than my firm and the members of the wealthy homeowner who have access to this information. They're actually going to get a bubble index is now going to be added to their dashboard. This is not a sales. This is not meant as a sales comment. This is meant as someone needs to tell the public the truth. Here is the truth about the GTA housing market. There is a function of a housing market which is called the home price pyramid. And a home price pyramid is always out there. What happens with a house price pyramid is it moves around Canada every single month, and it moves to the housing market where the individual homes that are getting the highest gain are located. That's how a house price pyramid is formed at a national level. So here's the example. So if anybody's got pencils, they can write this down. In Canada, in the month of February 2017 versus 2016, the average selling price nationwide increased 3.27%. The average selling price in Canada, February to February, 2016 to 17, increased 3.27%. That's at the peak of the pyramid, the top of the pyramid. One level down is the province of Ontario. In order for Canada to get that little tiny 3.27% gain, the entire province of Ontario had to increase by 23.87% year over year in February. So for Canada to see that little tiny 3.27% gain, of course, because housing prices in British Columbia are plummeting, Ontario had to increase 23.87% to keep Canada above water. Now, Canada has been deflating now, has been cooling. The housing market the house prices have been cooling now in Ontario, in Canada-wise, now for 8 months. How did Ontario reach that staggering 23.87% increase? Well, the Greater Toronto Area, which makes up the most sales that are taking place in the province of Ontario, it had to increase 27.83%. The next step down on the house price pyramid. So in other words, if housing prices didn't go up 27.83% in the GTA, Canada wouldn't have saw that 3.27% gain. How did the GTA go up 27.83%? The York region, one of the regions in the GTA, it increased 32.4%. That's how the GTA increased 27.8%, Ontario increased 23.8%, and Canada increased a little tiny 3.27%. How did York region increase that 32%? Well, the town of Richmond Hill, it increases 34%. That 34%, because Richmond Hill is so big, such a big portion of York, allowed the 32% to happen in York. Well, how did Richmond Hill get that 34% gain? Well, in Richmond Hill, detached homes, all of the detached homes that sold, they increased 41%. So the 41% increase in the detached homes equaled, I'm going to start rounding numbers now, a 34% increase in Richmond Hill, which caused a 32.5% increase in York region, which was a 27.8% increase in the GTA, a 23.9% increase in Ontario, down to a 3.27% increase in Canada. But we're not going to stop there, because the final base of every house price pyramid is an individual house. And in Richmond Hill, there were individual same houses that sold for 65% more year over year, February 2016 to 2017. Without those houses selling in Richmond Hill, those same houses selling for 65% more, Canada wouldn't have saw a 3.27% gain.
Ross,
this is what's called a house price pyramid.
Ross, when is the Toronto bubble going to burst? You were bang on with your prediction for Greater Vancouver. When does the GTA take a deep breath and plunge?
When is it going to plunge? Okay, so if someone was to use our metrics and you were to align Vancouver, Greater Vancouver area, not just the Real Estate Board of Greater Vancouver, the entire Greater Vancouver area, and you were to look at the Greater Toronto area, excluding the portions of the market where the statistics are messed up. So there's parts of the outer limits of the GTA, if you remove those. When you compare those two markets, they are moving, right now the GTA is moving identically month to month like Greater Vancouver did last year. They are impacting their provincial numbers the exact same way that they did last year. How can I explain this to you? In the month of February in Ontario, the bubble index hit a record. It hit 583. Now, what that means is the houses that were selling in the month of February were 5.8 times inflating housing prices 5.8 times over what they were in May of 2013 when this current cycle started. You have gone from the normal increase that was taking place in May of 2016 all the way up to 5.8 times higher impact on the average selling price. So what the bubble index measures simply is how large a housing bubble increases in a given month And normally they inflate on a little bit, and it continues to inflate until it can't inflate anymore, and then it slowly starts to deflate. And in those periods, people don't even understand what's going on. What you have now at 583 in Ontario, if we look back to British Columbia in, let's see here, April of 2016, they were only at 374. So their bubble index only recorded 374. But April of 2016 was when the bubble peaked in British Columbia. Ontario's now is already 200 over that metric in the month of February. My understanding is, by the looks of the house price trends, it's going to go past that again in the month of March. We're still sifting through the data. I know the real estate boards are going to start releasing, and there's some real estate agents who are starting to do that nonsense that they know what they're talking about with house prices starting to come in the GTA like they did in Vancouver last year. It takes us a few days to go through the numbers, but those numbers in Ontario and British Columbia are so parallel, it is scary. It's almost like we're fabricating the numbers. The parallel is that precise. Does that mean that the market is going to roll over in May in Toronto? Are we going to get through April and it's going to roll over in May? Or is it going to roll over in June? Or is it going to roll over in July? I don't know. I will know when it's going to happen. There is one thing, though, that everybody should understand about the GTA and Ontario versus British Columbia. And that is the magnitude of the house price, the house price gains. Even though, British Columbia's annual growth rate since 1980 was, 6.06%, and, Ontario's is hovering around, 5.46%, it's the sheer size of the difference that matters. Ontario housing prices in the last 25 years, as of this month, have increased $377,000, where at your peak last year, a 25-year gain in April was recorded. Well, actually, your peak gain actually was July of 2016. You were at $540,000. So there's basically a $200,000 extra gain that took place over the last 25 years in the province of British Columbia per home than there was in Ontario. So Ontario still has a little bit of room to flex before it rolls over, because it's such a larger market versus British Columbia, in the same way that Canada always has more room because it encompasses the whole country. But the parallels are identical.
Ross, thank you so much for chatting with us.
Hey, no problem. You have a great day, Jim.
My guest has been real estate consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.